everybody, it's John. Welcome to FinTech Plus. I'm very pleased to be joined today by Christoph Gum. He is the founder of Private Alpha Switzerland, here to tell us more about the company and show us a little bit as well, too, hopefully. Hi, Christoph. How are you?
Hi, John. I'm fine, thanks. Thanks for having me today.
I was hoping you could give people a little bit of an introduction. Tell us about yourself and your career before starting the company.
Yeah, I'm 44 years old. I'm since 25 years in the financial industry. I started my career with Citibank in Munich. Then I did my university in Germany and the States. And then I worked for a couple of years for PricewaterhouseCoopers. And in 2005, I joined Credit Suisse for almost 14 years. Last 3 years, I was the CEO of the Austrian and Eastern Europe business out of Vienna, of the private banking franchise. And in 2017, I started with 4 co-founders, a team out of private bankers and researchers out of the AI ecosystem here in Switzerland, from University Zurich, ETH Zurich, and the CEN in Geneva. We started Private Alpha Switzerland, which is a wealth tech company focused on AI development in asset management.
So I guess there was some context there for creating Private Alpha. Can you tell us the origin story? What was the inspiration and how did you get started with the team?
After more than a decade in the private banking industry, we realized that a lot of movements are even on the passive side, and everything is moved more to reflect the market. So there's not really a lot of movement in client portfolios, because all of the major banks are reflecting market indices. And what we saw in the financial crisis is that more or less the whole sector went down, and only a couple of hedge funds detected the crisis right. And in 2016, there was an event in the tech industry when DeepMind founded, or Google bought DeepMind, and they did this chess event with AlphaGo. And when we watched this and we discussed this in the future founder team, and said, "Hey, this is something great. You have patents, you have new technologies, you have self-learning tools out there, which really could revolutionize a lot of industries." And what of course, as we are out of the financial industry, we saw a lot of opportunities for using this technology in asset management, private banking context, and that's why we founded Private Alpha, actually. So we hired a team of experts out of the AI ecosystem, and we brought it together, private banking expertise with tech expertise, to more or less digitalize the whole segment of analysts, the whole segment of technical and fundamental analysis out of our AI platform. Yeah? And that's why we founded Private Alpha.
Can you give us a bit more detail on what exactly you've done in terms of business model and technology stack to put together your vision?
Put it with some examples. Probably a lot of our viewers and followers who see this no technical analysis in the financial context, like Bollinger Bands, MACD indicators, all these technical sentiments which are out there. We collected 400 proven by science, 400 technical models, and we all collected this on our platform. So our AI platform, it's called Caesar. In Apple, it's called Siri. With Amazon, it's Alexa. So we said our platform should have a name as well. So we called our platform Caesar, which is already in some areas pretty well known now, because it's our universal platform, which can do technical analysis and fundamental analytics. And so we combine both sides of the industry. So there's a lot of fundamental driven analytics, like interest curve, PMIs, all the macro indicators which are out there, where the quant world is setting up a lot of tools and strategies, and this technical trading. And we combine both on our platform. So all our products are optimized by an ideal set of indicators. And the big difference to existing quant models is that self-learning tools with deep reinforcement learning are adjusting dynamically to market situations. So it's not like static, it's dynamic. So we have not a static quant, we have a dynamic quant system. That's the core USPs for Private Alpha, for our IT landscape.
You're in a space that's extremely competitive right now. First of all, artificial intelligence and machine learning, but then also the seeking of alpha in financial markets. I'm curious, how have you really distinguished yourself in the competitive landscape? Where do you see the competition, and what makes you different specifically?
I see the competition globally. I was invited 2 years already ago in New York on a hedge fund conference, and you saw there how big the investments are in new technologies, in testing new ideas compared to Europe. And of course, Asia is ramping up very fast. For us, we see us as a Swiss player with a European focus. And in Switzerland, we don't see that much competition. One company we saw was bought last year. We had another competitor in Frankfurt, which was bought last week, actually, from a private equity firm. There are a handful of competitors in the startup and, let's say, mid-sized boutique asset management scene. Of course, bigger banks are ramping up, or bigger asset managers ramping up their initiatives in this segment. But overall, I see the competition is still very moderate, even very rare, which is a very good sign for us, because we are in the forefront. I compare it with the internet.com bubble in the year 2000. I was involved in a startup. We had an IPO in the year 2000 on the German stock market, and we had 400 competitors in e-commerce software at that time when we went to the stock market, and the market was growing, but it was enormous competition. Of course, the asset management sector is competitive, but we see a fraction of this of the competition. So we see us in a unique spot. We build up 3 years of experience. Of course, as a startup, you learn a lot, especially during the first years. But now we are in our third generation of AI tools in the company, and we see very, very interesting and very, very promising results. For example, last year, we issued a certificate on the Swiss market. It's a smart AI-based index tracker on the SMI together with Bank Vontobel. And we had an alpha of 3% to the index with 30% less volatility rate. So it's enormous how good from a risk return perspective, how good the product worked. You can see it on our homepage. And we was awarded the top 3 alternative investment products on the Swiss Derivative Awards session. So we're very, very happy about this result.
Congratulations for that. I want to come back to take a look at your tools, but and also talk a little bit about starting a business in Switzerland. But before we do that, can you talk a little bit about how you were able to start the business and able to scale it up until now? There's always a certain amount of mystery around the financing and growth scale up of ventures, and that's something we try to shed a little bit more light on.
We are very experienced founders. In the core founder team, it's myself. I have I'm 25 years in the industry, 15 years for corporates, 10 years, or let's say 20 years for corporates, 5 years in the founder ecosystem. So I had a pretty good network to start the company and to form the team. My co-founder Christoph J, he was Isabel. 15 years in the industry, has a very good network here in Switzerland. Alan Solansky is our lawyer. He's a startup ecosystem lawyer here in Luzern, in Mecken, and in Munich. So he's connected to the major universities in Munich and here in Switzerland. And out of this network, we had a very good foundation to start the company with Andreas Perreiter, our first business angel and board member. He has our own venture company in Germany focusing on early stage startups. He was one of our first investor, and due to his ecosystem, we could attract more investors. So we already had 3 financing rounds. We raised a significant amount of capital for our company. And even Corona was for us not up to now a big challenge because we had a round before this pandemic. So we see the current environment for us as challenging it is for everybody of us sitting at home, having home office. We think the pandemic boosts digital businesses massively now in the next 24 months, and it boosted us already over the last 6-7 months after the worst lockdown scenarios was over in the mid last year. So we think digital businesses, especially in asset management, digital asset managers are moving very fast now, and we feel we are in a brilliant position to grow the company now even quicker.
That's excellent news, especially when there is so much confusion around COVID and what might come after it. You hinted a little bit to what the focus is right now and where you plan to go in the coming years, but I was hoping you could say a little bit more specifically. Are you working on product development, client development, and business development, or is there more fundraising in the future? How do you see the coming years developing?
It depends a little bit on the next months how the pandemic runs, but we are planning a lot of growth initiatives this year. We are planning to grow the developer team. We are planning to boost our cooperations with large institutions. We have a couple of key client projects in the pipeline where we large corporates want to use our technology. We are boosting our product offering. We just issued 4 new certificates with a German and Austrian company. So we are on all fronts. We are moving forward. Home office is for us not a problem. We are fully digital. All our systems are in the cloud. We can access this from everywhere. So for us, the environment is even a boost now after a couple of months weakness last year. It's great at the moment to have so much demand out there.
Excellent. And you said a little bit before that you're a Swiss-based company focused on European markets. Is that where your growth will be focused in the coming years, or are there some more niches or broader markets that you think are worth mentioning?
We are focused on the German-speaking part of Europe, like the DACH region, Germany, Switzerland, Austria. That's where we are at the moment. We're getting interest from the UK as well, as there's a main financial hub. And this is the focus of the current setup. Of course, we have a global vision, but at the moment we want to reach our first milestones here in the German-speaking part of Europe, and then scale it even further.
And I don't know if it's too early for you to have a clear vision, or if you really want to say more, but what's the ultimate goal for Private Alpha? Is this something you see as a standalone business? Would you like to be acquired, to go public? How do you see this all panning out in a potential future?
Our vision is to be a leading wealth tech company in the 21st century, and our vision is everything is fully digitalized in the industry. So a lot of analyst tasks, in our view, are moving more and more in the machine learning field. And of course, as a startup with professional investors, our mission is clear. We want to grow fast and quick. If it's an exit, an IPO, we will see. We are in the 3rd year of operation, and our mission is to be quick and fast, as all startups.
We also talked a bit about some of the major trends that are reshaping the world at the moment. Digitization is an obvious one. COVID, given that we're here on a virtual meeting and interview, is another one. I don't know if you would like to say more about COVID, but I thought given the nature of your company, you might have some thoughts on, first of all, crypto, but then also some of the market developments, like, for example, the GameStop debate.
We see crypto, for example, linked a little bit to the asset bubble we are in. I had last week a webcast with online conference with a leading German news portal, and they asked me the same question: in what world do we live now? We have a stock market which is booming. We are living in a pandemic where the real economy is lagging behind. Some sectors are even totally on hold, and we have a crypto boom where crypto assets grow by 25% on a weekly basis. So how is this all sticking together? And our answer to this is, and this is how our machines and our analytics tools, our CISA is trained. It's all linked to liquidity in the end, and we are using on the fundamental side of our AI platform. We are really using all the open source links to the central banks of the world. For example, the Fed with the Central Bank of St. Louis, with the data cube, with the Fed, we are detecting all the data the US Fed is putting to public. So immediately, if it's released, we have it in our machines. And we see it very clear that the liquidity and this massive liquidity is pumping up all asset prices. And there is the famous saying that you shouldn't fight the Fed. And this is more relevant than ever, and I think a lot of market participants are underestimating this power. And of course, the valuations are very high at the moment, but it seems to be that they tend to be higher as long as this lockdown regime lasts and this massive stimulus is coming in. And that's, I think, why crypto is running so nicely at the moment, because a lot of people are afraid. I mean, Elon Musk put 1.5 billion of his balance sheet into Bitcoin. He realized over the last 2 weeks a 500 million profit, which is of course not realized, I guess. But you see what's out there. If the richest man on the planet is moving some of his assets in Bitcoin, this puts a lot of pressure on all the other CFOs in the industry. And GameStop is for me just another example of a new paradigm of gamification and real global connected traders, which is like a swarm. You can move on a highly predictive scale, and this is completely new. And I think a lot of hedge funds are really afraid what is going on, because at no time before you could face and challenge a hedge fund with $10 billion under management on the short side. So I think this is extremely challenging, extremely interesting, and extremely profitable times you are in at the moment, and you can make profits on all of this, but you have to be aware that it's a high valuation. And there we see our system. It's an assistant system. I compare it a lot of times with the self-driving cars, because everybody who buys a new car buys a car with an assistance system, which have automatic brakes, detection systems. And we see the same for the financial markets, especially a lot of newcomers who are new to the market. They need guidance and they need a lot of experience. They can read a lot of books, but they can get assisted now by these tools. And everybody who wants to use our research is free to join. We are still on our website. We have a research section where everybody can subscribe and get the knowledge out of our assistant tool. I think it's very useful, very helpful. And if you look at our products over the last months, I think we have very nice returns.
You know, you mentioned earlier, Christoph, that you are an international entrepreneur who's decided to start a business in Switzerland that's serving international markets. What's been your experience about the dynamics of the Swiss FinTech ecosystem, and perhaps some of the opportunities to make it an even more thriving, community with global ambitions?
Yeah, the pros of the ecosystem here is you have a lot of experienced people in the private banking, asset management side, and in the tech side. So the level of education is very high. You have ETH, you have Zurich University, you have CERN, you have all these other research institutes. You have the big banks with tremendous footprint. So the foundation is great. I compare it a little bit. These are the pros. So you can build when you have a focused team and you have your connections, you can build excellent companies here in Switzerland. On the other side, you have a ecosystem which is not so fast. I can compare it with Vienna even a little bit. When I was there with a lot of VC colleagues out of my time when I was in the bank there, and we had a really good ecosystem. And of course with Berlin in Europe, and this is not really comparable because you have more risk appetite, you have more drive, you have quicker decisions. But I think the biggest difference is risk appetite, and you see larger rounds, you see more rounds, you see more funds are coming in. I'm as well invested in a VC fund privately, so I see a little bit where the global flows are and where are the big funds moving, and they are moving mainly to Berlin. So I have to say, even with these massive opportunities, I think the ecosystem could be on a much higher scale, and I think need to be on a higher scale. If you see companies like Square or Revolut, Square is a stock listed company with a market cap over 100 billion now. It's more than Credit Suisse and UBS combined, and they are growing like 400% a year. Cash App is revolutionizing trading and cash movement. And this is a global game. This is not a Swiss game. So and the market is battled now. Yeah? Futu in Asia, Robinhood, Square in America, in Germany you have N26, you have Revolut. So this market is moving so quickly, and the future of banking is not in the banks. The future in banking is in the apps. So this is something everybody needs to be aware, and you have to drive quick because the market is getting much quicker. We put it on our website where we stated that we think that 2021, the decade now who started, is a disruptive decade. You have this amount of liquidity in the markets, so a lot of ideas are funded really nicely. And ideas are scaling very quickly. It's not like 20 years ago when you have 4, 5, 10 years when ideas come to market. Now in 18, 24 months, ideas are at the market, boosted with so much money. So the change of innovation is so quick. And I think a couple of larger companies are not aware what storm or tsunami is coming in the next couple of years.
Yeah, it's been, I think, a little bit of a distraction seeing the success of, in some ways, of the crypto valley and the hope that created, which I don't think actually goes far enough to really be disruptive around the culture and the structure of how things are created and thrive. And then when you look at the stock exchange, they've shed their payments business and they're delisting companies a lot quicker than they're listing new ones. So I think the signs of that trend that you speak about is not only in the market capitalizations, but in other leading indicators that more needs to be done to, I think it's a balance. It's about managing risk effectively and allowing for a little bit of the irrational in a very rational way. So, thank you for your perspective on that one. Any final words?
We see a lot of new stock market participants. I think in Germany over the last 6 months it was 4 million. So massive growth market. It's the first time since 20 years. Last time we saw this boom was in the year 2000. So I think we especially FinTech, wealth tech, all this ecosystem, I think we see massive growth. A lot of new clients, a lot of new customers, a lot of new products. So it's a brilliant time to be in at the moment with our company in this environment.
Thank you again, Christoph. I'm going to wrap it up there.
Okay, great.
Thank you again for the time, and looking forward to keeping in touch as things develop. Let me know.